Hello everyone and welcome to Moementum channel. My name is Mo, and in this video I'm going to be sharing with you an updated review of the portfolio that my wife and I have built in the stock market, what holdings in particular we have, and which stocks or ETFs we are buying right now in the stock market. Before I dive into this video, and for those of you who may not know me, my friends call me Mo, and that's why I have started a YouTube channel about 5 years ago called Moementum Finance. That's where I talk all about investing in the stock market, particularly investing for beginners through passive index fund investing. I also talk about ways to reach financial freedom and sharing my own journey investing in the stock market through stock investments, index investing, as well as the Smith Maneuver portfolio that we have for our own primary residence. I'm quite active on the Canadian investment app called Blossom, where I share a lot of my learnings and interact with amazing investors, whether seasoned ones or new investors. If you have not checked out that app already, be sure to do so. I've added the link for easy download for free, and you can follow along and get connected with me on Blossom. Before we get into the video, I want to give a quick shout out to a few of the different Blossomers that we have on Blossom app. If you haven't done that already, download the Blossom app through the link provided in the description, where you can connect with me and many other wonderful and amazing investors here in Canada. Here's a quick overview of the dashboard that I've built, consisting of the entire holdings and investments that my wife and I have across multiple brokerage accounts. Majority of our funds are in Wealthsimple. That's for the funds that my wife has, as well as most of my own investments. That said, I do have quite a considerable amount of investment in Questrade, and I only use Questrade for our Smith Maneuver portfolio. The main reason for that is that for our Smith Maneuver portfolio, we want to make sure that those funds are kept separately, just from a lens of taxation purposes, making sure that they're clearly kind of separated out, and it's easy for us to keep track of any transaction that happens for that account. As you do notice, our entire portfolio, which is currently sitting around $468,000, is mainly in three holdings. Our major holding is XEQT. XEQT is iShares Core Equity ETF portfolio. We have close to 15,000 shares of it. XEQT is an all-in-one ETF, which means through XEQT, you'll be able to get diversified exposure to the entire global stock market, including the US stock market, Canadian stock market, as well as emerging and international markets. That is why close to 90% of our holdings are already in XEQT. We find it a wonderful way to get diversified exposure to the stock market. XEQT was incepted a few years ago. It wasn't incepted that long ago, in fact, August 7th of 2019. Nonetheless, its methodology and approach to investment is sound. If you look at the recent and past return in the stock market, 1 year return at the end of August was up by 15.6%. 3-year return was at 9.2% annually, because these are annualized return, and the annualized return since inception is at 9.6%. What's unique about XEQT is that it does the automatic rebalancing for you. So as over time the value of your holdings increase or decrease, your asset allocation might change. And through this fund, the rebalancing is done automatically, so you don't have to worry about having to buy certain stocks or ETFs more versus the others. It's done for you automatically, and it's taken care of for you. And in doing so, through that ease of kind of access, you have to pay some of that fee, and the fee that you are paying for the holding on to XEQT is at 0.20%. What this means is that, let's say if you had $10,000 invested, you'll be paying a fee of $20. This fee is deducted directly from the fund, so you'll not be seeing that, and the returns that you see are net of the fees already. The fee is quite minimal if you compare that to the likes of 2 or even 3% for the mutual funds. The holdings for XEQT consist of 4 different other ETFs. All of them are ETFs that are offered through BlackRock, because XEQT is a BlackRock ETF itself. These include ITOT, XEF, XIC, and XEC. Based on the approximate weightage that you see here, you do notice what your approximate asset allocation is. Approximately, you're getting, as noticed, around 47% exposure to US market, around 24% exposure to the international developed markets, excluding Canada and US. XIC is for exposure to Canadian market, so you have around 24% exposure to Canada, and with XEC, around 5% exposure to the emerging markets. Keep in mind that even though these other ETFs, they have their own underlying fees and MERs, you're not paying these MERs separately again. The 0.20% MER that you saw, that's the overall and only MER that you're paying by holding on to XEQT. Just wanted to point that out for you. If you're interested, what different holdings or companies you're getting exposure to through holding on to XEQT, you can click on that third tab here that shows you, for example, majority of your exposure is to Apple at 2.8% weight, then Microsoft, Royal Bank of Canada, Amazon, Nvidia, TD, Shopify, Google, Canadian Pacific, and Canadian Natural Resources. These are your top 10. If you're interested to see the entire holdings, there's 977 pages of it, or approximately 9,800 different companies that you can easily see by downloading the holdings and getting access to the full list. Which is why when you are holding onto a fund such as XEQT, you really don't need to hold on any other stock or ETF. It's considered to be an easy way to have a diversified global exposure to stock market. I'll share with you in a moment why I chose to add 2 more additional ETFs to my holdings. That said, it's not really mandatory. You can simply go with XEQT and build on a one only ETF fund for your portfolio. In fact, many of my friends on Blossom that I interact with do follow similar approach. For example, KYT is one of my friends on Blossom that I've actually recently interviewed him as well. He has a one single ETF portfolio which consists of solely XEQT. Here you can see the breakdown by different countries. Approximately 23% to Canada, around 46% to US, and the rest of the countries that are showcased here. One thing that jumps out at me here is that the 6% exposure to Japan. Why it's interesting for me is, if I quickly show you this other page from Statista that shows the distribution of countries with largest stock market worldwide as of January 2023 by share of total world equity market value, you do notice that US stock market accounts for approximately 60% of the world economy and stock market. Japan is around 6%. So you did notice that you got that 6% or so through exposure to XEQT, which was quite interesting. UK is around 4%, China around 4%, 3.7% to be accurate, France 2.8%, Canada is at 2.7%. So Canadian exposure to the world economy and stock market is only at around 3%. That may pose the argument of having some home country bias, because with XEQT, as you notice, we're getting around 23% exposure to Canadian markets here. It is a little bit of that intentionality with XEQT with the purpose of lowering the volatility, and given that this is a Canadian fund as well, that's why you have a little bit higher exposure to Canadian markets. For us, just to try to avoid that, and also to avoid the withholding tax that you might be exposed to through investing in US funds and international funds, as you invested in a non-registered account or a TFSA. For my RRSP account, I'm holding on to the shares of VT and VTI. VT and VTI are both in US dollar funds. VT is the Vanguard Total World Stock Index Fund. Through VT, you get exposure to the in pretty much practically the entire global market. This includes Canada, a very small portion of Canada, I would say, hovering very, very small portions, less than 10%, but majority of it is exposure to US and some exposure to international emerging markets. I hold on to VT approximately $27,000 right now in my RSP account, and this way I can try to lower my exposure to Canadian markets, because like I said, VT has a very smaller proportion of investments in Canadian companies. The other holding that I added in my RSP account is VTI. Through VTI, Vanguard Total Stock Market Index Fund, you get 100% exposure to US companies. It is for the US in total stock market. Through holding on to VTI, which is at approximately $16,000 USD, I try to expand and increase my exposure to US market. My target is for exposure of US market to be at around 50%. Currently, for our entire portfolio that we have approximately 45% exposure to US market. My goal is for Canadian exposure to lower it to only about 20%. Right now, we are at around 27%. One of the reasons that this is higher is that we are still holding on to approximately $27,000 in cash in our brokerage accounts. We are gradually using these funds to buy into more shares of XEQT. As we do that, you are going to see that these Canadian target, you're getting a lot closer to that Canadian target asset allocation. The 27% is going to go down over time, get a lot closer to the 20% mark. For emerging markets, we are aiming for that 5% target. We are very close to that at 4.8%. And lastly, for international markets, we want to aim for that 25%. And currently, we are close to 23% exposure. For these three funds that we have, XEQT, as I indicated, has a management expense ratio of 0.20%. VT has a management expense ratio of only 0.07%. It's very, very minimal. And VTI, you can't beat that. It's only at 0.03%. Like I said, for me, VT and VTI are only held in my RRSP account, mainly because I want to try to minimize as much as possible the impact of the 15% withholding tax on any dividends that I get paid from, mainly for US dividend paying companies that are held in RRSP. That way we can avoid for that. And that's why they are held in US dollar in my RRSP account. There is some cons to it though in saying so. Even though I'm going to be saving on those 15% withholding tax on those dividend income, I had to convert the funds that I had in my Wealthsimple account to US dollar account. So you do notice, for instance, here in my account, in RRSP account, the entire holdings is in US dollar. It is currently around $31,500 in USD. This fund, I had to convert it. And in order for me to do that, I ended up having to pay a 1.5% conversion fee, because even though my account balance on Wealthsimple is more than $100,000 and I get a free complimentary USD account, so I can hold on to my funds in USD if I so choose to, I still have to convert my funds first from Canadian dollars to USD. That's what I had to do, and I ended up paying some of that fee, which was quite considerable. If you think about it, that's 1.5% on the currency that you're converting it to. So imagine first, based on the exchange rate applicable at that time, Wealthsimple is converting it to its equivalent in USD, then 1.5% of that USD equivalent balance I'm paying in in terms of the conversion fee, which would be considerable. So if you think about it, that could have been almost 1.5% of this $31,000 or so, roughly around that. That could easily add up to around $300 to $400 that I had to pay to convert it at one point. For the long term, though, as I collect any dividend income from VT, as an example, which has approximately that 2.7% yield, those dividends are automatically paid to me in US dollars, so that's positive. And same goes for VTI. Any dividend income that I'm getting paid from VTI as well, which has approximately that 1.5% dividend, is going to be paid in US dollars. September is going to be an interesting month for us. We are expecting to get dividends from all of these funds. I believe in late September, we are going to be expecting some dividend payments paid from XEQT, VT, and VTI. Now, I did share earlier on that I'm going to be sharing with you what specific ETFs or stock I'm buying right now. The truth of the matter is I'm not buying any stocks, mainly buying and adding to our existing ETFs. And the best way to show you that is just showing you the portfolio that I have on Blossom, because it captures those trades real time for me. All right, so you do notice here my account on Blossom. I have the user handle Moementum Finance. You can easily follow me there. Here's, I'm showing you the private balance. So the total balance for my accounts connected here, which consists of my Wealthsimple account, as well as the Smith Maneuver portfolio that is linked to my account, is here. The total here is showing at $370,000. The remaining $100,000 or so is actually with my wife's account in her Wealthsimple account. That's how the total balance of our account hovers around that $470,000. You do see here exactly how many shares of XEQT I have, and it accounts for 89% of this holding, my portfolio. VT, we have 205 shares, and VTI, we have around 52 shares. And their returns are showcased here. The best part about this app is that if I hover over you, you can see, for example, how has been the return over the past 1 month, 1 year, and 5 year. These holdings had been held them on for the past 5 years. Can easily show you how they're doing. I can easily also compare this, for example, with S&P 500. And for example, for the past 5 years, even though we're lagging behind S&P 500 for the past 5 years, keep in mind, S&P 500 had an amazing run over the past 5 years time period. It's not going to always necessarily be the case. The truth of the matter is nobody can predict how the stock market is going to be doing. That's why I rather focus on more of a get rich slow by having a more of a diversified global approach to investing in the stock market and not just putting all my eggs into one market, such as the US. You do see as well how has been our exposure to the different market sectors. Technology, we have the biggest exposure at 19%, financials 18%, and industrials at 12%. The other column shows you how do blossomers on this app are actually getting their exposure. Majority of them having exposure to financials at 35%. I did talk about what stocks we're buying. If you click on the Trades app, and you can easily see that by accessing this app and just following along me on this app, you can get notification, but also you can go here and easily scroll through it. The latest buys that we had is mainly XEQT at different prices. You do see exactly what we bought and how much we added to our portfolio specifically. You do notice that I also added to my shares of VTI and shares of VT, pretty much adding to those holdings over the past several times. At one point, I ended up posting that I sold my shares of XEQT. These were my 500 shares that I had with my RRSP account, because I wanted to make sure my RRSP account is only invested in US dollars. Hence, I sold the 500 shares that I had in there and ended up pretty much converting it and buying shares of the VT and VTI over time. There is another tab on Blossom that you can see the different posts that I have here. I do regularly post different contents. This includes some videos that I share through my YouTube channel, but also some other educational videos that I try to share, as well as some polls that I try to get a perspective of the community that we have here on Blossom. I definitely love the community that we've built here on Blossom, and I highly encourage you to join it as well and follow my journey and follow the other amazing Blossomers that I've connected with here and learned from as well. If you enjoyed this video and gained something of value from it, please don't forget to subscribe to me both on my YouTube channel, give this video a like, and follow me on Blossom app. I also love to hear from you, whether it's through commenting on my YouTube channel or through Blossom. Let me know what you think and whether you have a similar approach to investing in the stock market or a different approach. As always, thank you so much everyone for watching this video until the end, and I hope to see you all next time.